Good afternoon, everybody. My name is Stephen Nolan, and I'm the Managing Director of the UNDP Financial Centres for Sustainability and Head of Secretariat of the UNDP Sustainable Insurance Forum. And I'm also Director of the Irish-based International Sustainable Finance Centre of Excellence. Today, with the support of Skeller Ireland, the Irish government's training agency, we're doing 4 virtual panels with global to domestic leaders where they're discussing what came out of COP28 last year and also looking at the sustainable finance agenda in 2024 as we build to Baku. Previous discussions this morning have looked at the whole area of transition finance, regulatory activities, policy, market action, innovation from both a financial instrument and then innovation from technical solutions, and very importantly, nature and biodiversity. And at the core of all this has been the talent agenda. Do we have the right people at our market, policy and regulatory level to drive this agenda? So, been very interesting takeaways, and the likes of Dr. Majun and a host of international and domestic leaders have joined us. Today, for this session, I'm delighted to welcome our guest of honour, the ECB's Frank Elderson, along with our fellow panel members, Claudine Blamey, the Global Director of Sustainability at Aviva, Niall O'Leary, the Chief Sustainability Officer for Irish Life Investment Managers, David Carlin, TCFD Programme Lead at the UNEP Finance Initiative, and Oscar Njuguna, Acting Chief Executive Officer of the Nairobi International Financial Centre. So delighted to have all our panel members with us today. We're going to go straight to our guest of honour, Frank, who's going to be with us next 10, 11 minutes, and just to give us his takeaway from COP28, and then as we look to 2024 and what he hopes to see happen this year. So, Frank, it's absolutely a thrill to have us with you today. Thanks for being with us.
Thank you. A great pleasure for me as well.
Now, Frank, I bumped into you literally at COP. It was a very, very busy period at COP. All the leaders, including yourself, there at a sustainable finance or financial sector level, actually, and then obviously talking about the whole area of sustainable finance. But before we get to COP, Frank, and I'm always curious this from a leadership perspective, and it's great to see there, I think, in Frankfurt with the flag there behind you. But coming from the Dutch Central Bank, what was your journey like to get to this whole area of green finance first and the importance of green finance, and then obviously in your role into ECB, please, Frank?
Well, thank you. Thank you very much for having me. And maybe to just, briefly go into that, I think what played a big role is the NGFS, the Central Bank and Supervisors Network for Greening the Financial System, which, when we started this, and I was the first chair for the first 4 years in 2017, we started with eight members, Central Bank and Supervisors. And now today, these are 134 members and 21 observers. So I think that this NGFS, this network of central bank and supervisors, has built knowledge and capacity in a large variety of topics now, including climate-related and, as you said, environmental-related risks, scaling up green finance, climate change considerations of monetary policy operations, scenario analysis, supervisory guidance, disclosures, climate litigation, data gaps. The list is long. And today, the NGFS, I think, is rightly considered as one of the main drivers for robust recommendations and international convergence of climate and environmental analysis for central banks and supervisors. And while the primary focus of the NGFS is on climate, from the onset, we have made very clear that we should not lose sight of financial risk caused by nature degradation and the close connection this has with the climate crisis. And as climate change and degradation of nature do not allow for a break, I'm pleased to see that the NGFS is continuously stepping up its efforts in improving stress testing, for example, widening its scope to nature-related risk and the need for transition planning. And also at the ECB, because you asked about that, at the European Central Bank, we keep this topic very high on our agenda. Last month, actually, we published a new climate and nature plan 24-25, which is a response to the increased urgency to act. We will continue and expand on previous climate-related work in 3 strategic objectives. Within our mandate, of course, we will expand work on navigating the transition, addressing the physical impacts of climate change, and improving our understanding on the impact of nature loss. So maybe that, to just give a little bit of the broader background. how central banks and supervisors over the last years, within especially the network of the green finance system, have come to the conclusion that nature and climate-related risks translate into financial risk and therefore are squarely within the mandate of supervisors and central banks.
Brilliant. Thank you for that, Frank. And I was on a call with the NGFS Secretariat recently, and I've always been amazed at the outputs. And it's a great team. But then I realized there's a team of 22 individuals. And that's just going to show you the growth of the NGFS over the last number of years and the importance that the other central bankers are placing on that network. And as you said, for the support, capacity building, which is fantastic to see. The NGFS, if I can stay with it for a moment, Frank, was very prominent at COP, and a lot went through the Singapore panel, outside the Singapore pavilion, where Governor Ravi was there, and obviously you were there and others were there. Where, coming into COP and just, looking at the media and obviously you be involved a lot more, where your ambitions met for COP28, Frank? Have you seen that each COP that you've been involved in over the last number of years, there's been a movement forward coming out of each COP, please?
Well, I would say, to a certain extent, on some aspects, there were, exceeded expectations, but it remained also very clear that the current level of ambition remains globally largely insufficient. So to be a little bit more specific, the first global stocktake of progress towards achieving the Paris Agreement was, I think, a major milestone. But the fact remains that current global greenhouse gas emissions trajectories are actually not in line with the temperature goal of the Paris Agreement, are they? Yep. And there's an urgent need, therefore, to accelerate action and to scale up climate finance by a large margin. And to achieve this, international cooperation is vital to curb greenhouse gas emissions. Some of the measures taken at the COP28 are conducive in that respect. So let me just, mention three of those. If you like, the unprecedented language of transitioning away from fossil fuels in the energy systems is one. The commitment of 130 countries to triple global renewable energy capacity and to double energy efficiency by 2030 is second. And the, albeit small, but still coalition to phase out fossil fuel subsidies, maybe is also a third element. So from a financial market perspective, three decisions on climate finance stood out in my view. First, on a loss and damage fund to help vulnerable economies deal with climate-related disasters. With commitments to the fund in excess of $700 million, the beginnings of the loss and damage fund look promising. This needs to be compared, however, to an estimated 4 trillion annual losses and damage costs incurred by developing countries. Second, the newly announced $30 billion climate finance fund, encompassing both the private and the public sectors, is a substantial contribution. But it appears small compared to the investment needs for clean energy only, which annually amounts up to $4.5 trillion by 2030. And third, and not least, the COP28 decided also on the adoption of a new climate finance goal by advanced economies, the so-called new collective quantitative goal, replacing the 2009 decision to provide $100 billion annually in climate finance to developing countries. Yet, as I said, more needs to be done. And let me mention two more aspects that need our further attention. Funding for climate adaptation and nature-related solutions. The stocktake has shown that actual adaptation needs are currently 5 to 10 times higher than actual adaptation finance flows. The 2021 commitment to double adaptation finance by 2025 will not be met, and particularly private adaptation finance is too low. And the interlinked global crises of climate change and biodiversity loss make it necessary to better link developments under, on the one hand, the Kunming Montreal process with those of the UNFCCC. Nature-based solutions should be regarded as one aspect of the solution to the climate crisis. So maybe that on COP28.
And Frank, I'm just last question, if I may, and actually the last panel today is all focused on biodiversity and nature-related insurance loss. And the TCFD will be on that panel as well, which I'm thrilled with. Frank, so in terms of this year, so, as you said, a lot more to do, incremental. But in terms of this year, from your position where you are, what should financial service sector firms be really focusing on this year as we build towards Baku, please?
Right. Well, looking to climate finance, looking forward to COP29 discussions. Delivering on a new climate finance goal by advanced economies is important, but should not distract us from the fact that the majority of mitigation and adaptation funding needs to come from the private sector. We need to move forward on international climate policies and a regulatory framework which is conducive for leveling up private flows. And with this, I mean particularly four things. So let me run through those quickly. First, working toward an international harmonization of what constitutes credible, robust, and just transition plans, both at the national levels as well as for corporates and the financial sector. Second, agreeing on a global baseline disclosure standard and then forcefully implementing that standard, also for listed SMEs and within emerging and developing economies. Third, making progress on a global carbon price floor, as suggested by the IMF, halting fossil fuel subsidies and increasing targeted green subsidies. And fourth, increase the use of risk-sharing instruments, blended finance instruments, and other forms of leveraging private capital to investments that generate benefits for climate and nature finance. So this year's COP29 will be the litmus test, if you like, whether any additional action to be taken can be financed and how. And looking ahead, the main goal of the COP30 in Brazil next year will be to define new national commitments to further curb greenhouse gas emissions. So I'm glad to see that the COP28, 29, and 30 presidencies have formed a troika to carry on the commitments and lock in continuity and anchor implementation, which of course is key. So let me close here by reiterating the urgency, and that we need all hands on deck to bend the curve and prevent us from the worst outcomes. Thank you so much, Stephen.
Well, Frank, thank you very much for that. And I think actually an interesting point you mentioned Brazil and others is the fact that Brazil have got the presidency of the G20 this year, and of course the G20 Sustainable Finance Working Group as well, which is a lot is happening there, and your colleagues are really leading from the front there. So Frank, really appreciate you with us today. It's fantastic again, the NGFS colleagues and what you established. They're fantastic ambassadors around the world, and we do look to them for leadership. So Frank, without further ado, we'll let you drop off. Thank you again, and we get stuck into the panel discussion. Thank you, Frank.
Thank you.
Claudine, if I can maybe jump to you first in terms of the private sector level there, and Frank used that expression at the end, the litmus test, as you build towards 2030, COP29, COP30. And again, I'm not trying to put false deadlines from the perspective of the COPs, but they are there, they happen on an annual basis, and the key players such as yourself do participate and do attend, and you want to see action happen. Do you have any maybe just responses to what Frank was saying there in terms of the challenges he was laying out and what you and Aviva are doing to potentially overcome them? But you are a leader in this space anyway. So just curious, Claudine, if you have any reaction to Frank's comments.
Yeah, sure. I think I was at COP2 and we saw each other there, and I agree there was lots of obviously it was one of the biggest COPs we've ever seen. So that in itself was incredible. And huge amount of discussion. I was really amazed how much discussion was around nature, actually. And I know that's your next sort of panel. But those two conversations coming together, I think, are really important. I think also this area around sort of the financial regulator and how important that is in this space. Again, I think that's incredibly important because what they bring, I think there's three areas that they sort of need to start focusing on. And that's that interoperability, where we know that climate change and finance rarely have jurisdictions and stick to one country. So actually, we need to adopt a much more global standard to these things to smooth things over and introduce reporting requirements that have that in mind. And then there's that element of sort of credibility. Those standards that need to be robust. They need to ensure users can have confidence in the information that's disclosed. But at the same time, we need to balance that out with that it's not huge, so that it is accessible and people can do it, even small organizations. And then that idea around collaboration as well, which I think Frank talked about, getting this right will mean that the regulators, the central banks, the finance ministries will be all working together internationally to make sure that there is cohesion and that we are delivering on this in terms of a real sort of sustainable elements across the board, across the world. Because otherwise it's just not going to make any sense. And then coming back to your sort of question of what are we doing in this space? Well, we're doing a lot, and I haven't got time to talk about it all, but I'll give you a sense of what we are doing. And I think from a risk perspective, we are one of the leading insurers in the UK, and tackling it from risk and making sure that we understand what our material risks are, whether it's physical risks, whether it's temperature rise, whether it's new policies that are coming into effect, making sure that we take account of those. We have governance in place in order to do that. We have risk processes in place, and they are integrated into our decision making on a day-to-day level. I think that's something that everyone needs to get their head around, need to understand this. Being an insurer, we're experts in risk. And I understand not everybody would be in this space, but I think that is something that actually we would say that the regulator or others or standard setters also need to step into that and define how we unpack risk going forward. And then just talking about more on the investment side of it as well, because we have ownerships, we are a responsible investor, and we've decided to take a real sort of active ownership role around our investments. So disinvesting is one way of dealing with that, but we believe actually being a real active owner means that we can work with those organizations rather than just completely disinvest out of them, work with them to try and get them to a point where they're accelerating their transitioning towards a climate ready world. And then, of course, there's that influencing piece, which, as we are sort of seen as leaders in this space, it gives us the ability to be able to influence in terms of that systemic change. So we've been doing a lot of that, and we've got lots of examples of that. But again, I think I would urge others to also have strategies around this and start influencing across their worlds as well. I'll stop there. Claude. I can go on, but I'll stop.
No, thanks very much, Claudine. Maybe, Niall, if I can switch into you kind of from the Irish perspective, a significant book, the largest book at an Irish level. What Frank was saying, was that resonating with you? And maybe is the way Claudine has also talked about from the investment side. Just interested in your comments and your reaction to what Frank's remarks, please.
Thanks, Stephen. Yeah, they did resonate with us. And when it comes to what Irish Life Investment Managers is doing from an investment perspective, obviously our primary responsibility is to deliver the risk and return that our clients want. But the secondary focus is always going to be around being a responsible investor. And that kind of links back to some of the comments that Claudine just made. So as we look to ensure that our clients' portfolios are protected from climate risk, there are different ways that we can go about doing that. One is that we can embed specific philosophies into their portfolios, if that's something that they would like us to do. And the other is we can look to mitigate risk through the actions that we take as a steward of capital. So if I kind of break that down into two categories, I guess the first point I would make is that what we've witnessed in Ireland over the last 5 or 6 years is real demand from end clients for responsible investing solutions. Now that's where do you define responsible investing? But what I would say is that their recognition of the importance of climate in particular and the increasing relevance of nature is to the fore, and we see that in the way that they invest their money with us. The second thing I would say is that when it comes to providing solutions that clients need, they are very enthusiastic about how we oversee their capital. And that links back to the stewardship side. How do we engage with our investee companies? How do we vote on material issues? And to the point that Claudine made, again, we see ourselves as long-term holders of capital. We don't really see divestment as the preferred approach. And so engaging to improve how they work with us is certainly something that's to the fore. And I think one of the things that's you touched on when you made your introductory comments at the start is education. If you think back 5-10 years ago, the term ESG was really only coming to the fore. Responsible investing was quite a nascent flavor of asset management. And you can't just expect clients to embrace responsible investment solutions if they don't understand what that means. And so one of the things that we've focused on here in Ireland is educating key stakeholders. Mm-hmm. The key stakeholders from our perspective are our clients. They are the likes of professional pension trustees, but they're also our investment professionals and our distribution teams to ensure that they can take the challenges of today's world from a climate, nature perspective and parse that into something that is understandable and ultimately helps to make that difference that Frank alluded to, that we all have to make with the investments that we're making today.
Great, and thank you for that, Niall. Now, you know, and I'm thrilled because today these sessions are supported by Skillnet Ireland, which is the Irish government's training agency. And Claudine and colleagues may be shocked to know that over the last number of years, the Irish Sustainable Finance Skillnet has upskilled over 3,000 Irish-located financial service sector actors in this area. CRSD, taxonomy, and Irish Life are kind of the pin-up Irish Life investment managers in terms of working with Patrick and Niall and the team there. I think a majority of your team at this point now, Niall, have gone through some form of capacity building. And that actually leads me nicely onto David. David is with the UNEP FI, but he also thankfully provides a lot of the training solutions in the Irish market. David, you know, going back to what you heard Frank say there, and you were also at COP as well, but you deal with dozens of firms, David. So we've had the perspective of Claudine and Niall from their individual firms, but both very active in different initiatives as well globally. But David, you're in the weeds with a lot of firms. Just your reaction to Frank's comments on what you're seeing within the firms that you support, please, David.
Yeah, I think that we are seeing a continuing mobilization and also a diffusion of that knowledge from sometimes trickling up in the sense of having individuals who are required to meet these regulations, beginning to share that information, and it begins to evolve into business intelligence in terms of how it provides guidance for boards, it provides guidance for senior leaders. We've also seen the top-down approach of executives who have taken a real enthusiasm for this, for financial, for personal, for social reasons, but really saying that we want this to be core and embedded in the DNA of our firm. But of course, they can't do that alone. They may have the resources, but that means bringing the skills and the knowledge to bear. And I think programs like Ireland's Sustainable Finance Center of Excellence and the work of Skillnets really are good examples. And I've been very fortunate to work on a number of topics with you guys across net zero, across disclosure, across scenarios and risk. And I think part of this is ensuring that for each role, there is a level of understanding. And it's not that everyone needs to know everything. This is why we have firms, why we have specialization, but realizing that this is a change in the operating model. If you kind of think about it, and I'll perhaps use a bit of a silly analogy, but if you imagine that 40%, 50%, 60% of your firm didn't know how to use a computer, and you were trying to figure out how to run your business like that, the goal isn't that everyone needs to be part of the IT team. It's that we need to have the basic facilities with this. And so I think that that's really important. The work of the ECB and also internationally, the Network for Greening the Financial System has been really integral to helping to develop some of those supervisory approaches, templates, and accelerate that conversion. So people are in literal sense speaking the same languages on these things in different parts of the world. I think a lot of the feedback from recent assessments has shown that this is becoming a more relevant issue, but hasn't really penetrated to that core level, to that DNA level in many institutions. And this is why it's both about building up the skills, but also about acting on this. And I think really savvy firms, and we've seen a number of them in the folks that have joined some of the workshops that I've been a part of, have really asked, how do these things affect valuation? How should we begin to think about price in terms of if a firm is going to be able to transition versus not? These things are really the right questions and the right way to ask this. And I think the firms that do that are realizing that this is a competitive advantage in the same way that understanding globalized markets in the 80s and 90s was critical to reinventing and reevaluating one's supply chains. Similarly, today, it's not just you need to do sustainability, you have to do this reporting. But these are the shifts that are taking place. We have accelerations in EVs. I was just reading Bloomberg New Energy Finance and the record 1.8 trillion that went into transition finance last year in the energy sector. And so these changes are happening, and it's firms and portfolio companies that are doing them. And I think it's really recognizing that this isn't just a game of meeting and ticking the boxes on a particular disclosure or another, but really seeing this as a way of operating and doing business. And I think finance has a really pivotal role to play because it's about accelerating where capital goes and accelerating that allocation process to be smarter, to be faster, and to deliver that financing where it needs to be. Without that, I think these gears move a lot more slowly.
Great. Thank you for that, David. I really like that IT equivalent there you said earlier on. Not everybody needs to know how to, on the computer side. I'll be using that again, David. And if you ever hear me, just ignore the fact that I borrowed it off you, okay? Oscar, I'm delighted you're here with us from Nairobi today and a very active member of the Financial Centres for Sustainability Network within the UNDP. And as David said, this has now also become very competitive, but it's also become competitive at a financial centre level as well. And the Nairobi International Financial Centre, you're very active in the whole area of sustainable finance. But we heard Frank talk about mitigation, adaptation, funding needs to be unlocked. We heard him talk about the emerging market development economy. We saw a lot of that down in COP. I'm just back from the UAE post COP28. They really are established themselves as kind of a regional hub to finance the South. So all of this is going on, but on the ground in areas like Nairobi and economies like Kenya, what are the facts on the ground? You know, your local pension funds, your stock exchange. Where are we at this agenda at this point, please, Oscar?
Yeah, thank you, Stephen. It's great to be able to join you today and with such a great panel. I think some of the things that Frank mentioned, particularly around adaptation, are very relevant for us in Kenya and even across Africa as a whole. We struggle with things around the sort of disclosure. So the points around the baseline for disclosure is going to be important. I think elements like the agreement on a global carbon price are going to be really pivotal for economies like Kenya, because the revenue and the incomes from carbon credit generation are really critical towards ensuring that we can get more sustainable projects off the ground. And of course, the use of things like blended finance tools are really going to be key, because without blended finance, we won't get the amount of capital that is needed. I think from an African perspective, if I can perhaps maybe use that terminology, the concept of transition from infrastructure that is not clean is not really a big issue. The one that is really important for us is how can we ensure that our development continues on a trajectory that is clean, because our infrastructure has got a considerable way to go compared to the rest of, the global north. It's not that advanced. And so we really can grab this opportunity to leapfrog across some of the things that perhaps other developed countries have had to go through, and we don't have to do that. We have, for example, we have a grid in Kenya. The electricity grid is almost 90% green. It's predominantly geothermal, solar, and wind, but it's a small grid. So there's a lot more that needs to be done to develop the off-grid network, to take diesel out of the businesses that survive on, making sure that they have safeguards for power cuts, etc. So I think, we have the same challenges. Education is going to be really key. We've talked about the standards. I think, most businesses and financial institutions understand ESG, but, TCFD, TNFD are still a long way away from being implemented. There are standards that are being rolled out by the central bank, by the stock market. So there's a lot happening in the education space, but we really need to do more. And I love what you mentioned about Skillnet Ireland. And I remember when we were in Dublin last year, I think that engagement gives us a sense of what can be done if you have a well-structured way to roll out, education and capacity building. Obviously, mobilizing capital is key. What can we do to mobilize, more capital? We have obviously big pension funds in Kenya and regionally that have capital that can be deployed into the green space, but we haven't done enough to change the framework, but also make it appear attractive from an investment perspective, to ensure that these funds can deploy, more than sort of 3, 4, 5% into the green space. And so we need to do more in that space. And again, I think that working with networks like UNDP, Financial Centers for Sustainability, is going to be really critical to learning how other jurisdictions have done this. And then obviously an initiative that we're working on with UNDP, FC4S, with you and others, is really seeing how we can build up the pipeline of projects that are green and that are well structured and bankable, and that can attract the necessary clean finance into the particular projects, whether they're public sector projects, PPPs, or even the private sector. So really looking at how we can take that initiative and scale it so that we can have a deep pool of bankable projects. And then lastly, I'll just say that the policy and the regulatory environment is critical, obviously, to ensuring that the right incentives are in place for investment to flow into those sectors. So at the financial center, we've done quite a lot in terms of, say, capital gains tax to attract private equity and venture capital. We're looking at partnerships with some of the big global insurers around de-risking the big, solar energy, wind energy projects. And it's great to hear what Aviva are doing around that, from a global perspective. We've put in place some incentives for carbon. So there's a lot that we're doing, but obviously a lot more to be done. And it's great to have forums where we can sort of exchange ideas like this.
Brilliant. Thank you for that, Oscar. I'm going to just go back to Dave for a moment. David, just in terms of Oscar's point there, and the challenges are real. TCFD, TNFD, TCFD is in the way gone, right? ISSB and so on. But just your experience between emerging, developing, emerging economies, just in terms of the pickup, and what are you doing in UNEP to actually help build out that capacity potentially to fasten or accelerate that pickup, please?
Yeah, it's so critical, and it's absolutely about thinking of leverage points in the system. We love in the climate space talking about tipping points, right? And talking about melting ice and talking about ocean currents, and even technological tipping points, I think, are well understood. But I'm not sure we necessarily know as well and think about as much the knowledge tipping points that very much do exist. And when I think about, if I'm going to spend an hour of my time or my team's time and others across the UN on these topics, where is that going to be, most impactful? And in many cases, emerging economies will be exactly those places because they are the ones that have the biggest room to grow in terms of energy needs. They're the ones that are often most vulnerable to the impacts of climate change. And they're also the ones that have a real opportunity to choose a different path and follow a different course. We just heard from Oscar, of course, the geothermal power within Kenya is really impressive. And we have, other nations around the world that are also blessed with powerful resources. Brazil, of course, with hydropower is a great example. Parts of Canada and Quebec similarly. And recognizing that we don't need to repeat some of the mistakes that have gotten us into this mess of both a climate, biodiversity, and pollution crisis, those triple crises. And I think knowledge plays a critical role, especially when it is empowering us to learn faster. What we're really trying to do here, I think, is reduce the cycle time in the same way you think about kind of version 1, version 2. You have your iPhone, and then you have, your iPhone 2 and 3 and so on. And now we have these, supercomputers in our hands. Part of the goal is that if each one from first to second learning takes just as long as the last, we're going to fall short. So in this case, I think about the work that we are really doing with our regional coordinators. We've just brought in a number of new people on the ground in regions around the world, in Latin America, in Sub-Saharan Africa, in Southeast Asia. In addition, we've also been partnering more extensively with the Glasgow Financial Alliance for Net Zero. And really that's at a senior level between the UNEP Executive Director, Inger Anderson, and Mark Carney and Mike Bloomberg from the GFENS team, really saying that this capacity building work is something that is going to proceed together. And I think that that's a really important signal. I would also say, though, that we can't underestimate the value of local partners. As much as we are bringing that knowledge, when I was talking before about top-down, bottom-up, it's the same as much as it is with uptake. It's the same with distribution, too. And so while we may have a lot of the content, how do we adapt that? How do we develop that into a local context? And this is where, local financial centers for sustainability are so critical. This is where local leaders are critical. I was just in Mexico and speaking with a number of the folks who lead the TCFD consortium. And while TCFD itself may be retired and subsumed by the International Sustainability Standards Board S2 climate disclosure, the framework and pillars are very much alive, and the convening power that exists from an institution desiring to bring together the right in-country stakeholders is still very much active. And I think that approach is something that we need, which is really key local partners, key conveners. And then for us, and going back to what Frank said at the beginning, having those international perspectives, having that big group, both on the regulatory side and the private sector, those are all of the things that enrich that content. But ultimately, this has to become real at a local level, at a national level.
Thank you for that, David. And Claudine, maybe if we come back to you, if you don't mind. So maybe let's bring it back to the company level, but at a company that's, a huge company in terms of Aviva, UK, Ireland, Canada, and elsewhere. And I remember I asked you this question when you were good enough to participate in the panel for SIF during COP, and it was about Aviva's transition plan, right? And the kind of frameworks and the tools and methodologies that you use to develop that. And Niall, get ready for a similar type question because I know you've done something similar on Irish Life, but investment managers. But I'm assuming as you went through that process, Claudine, you're also engaging with stakeholders at a government, at a regulatory, at a policy level, your suppliers, those firms. Can you maybe just walk us through? And we'll bring it down from the financial center level to a company level. And this is something in terms of transition was at the fore of the first two panels this morning, how important transition plans and now the financing of those plans. Please, Claudine.
Yeah, sure. So I think we were one of the first to actually do a climate transition plan. Our CEO, Amanda Blanc, co-chaired the TPT, and that's been an amazing piece of work. So we set out in our climate transition plan, this is what we plan to do going forwards. And this was nearly a year and a half ago. Well, it was 2021. Gosh, no, time flies. So it'll be 3 years next year. So I think things have changed quite a bit since then. And we did obviously engage with our supply chain. We engaged with intermediaries that we work with to develop that plan. I sit at PLC level, and obviously we have to, delve deep into different business areas and really understand, what does this mean for our investments? What does this mean for our underwriting? What are the things that we've committed to, and then how do we deliver on those? I think in the past year and a half, there has been a lot more understanding of the nuances between what do these things actually mean on the ground? How are they impacting? The risks and the risk models are becoming more and more sophisticated in terms of climate modeling. The understanding of the actual impact financially is becoming more and more clearer. But I think also what's becoming very clear now is the huge opportunity there is in this space of the green transition. So actually, I'm expecting these transition plans to look a bit different now going forward, a lot more detailed, a lot more sophisticated, with a lot more understanding of what is it that these companies, including us, what is it that we are responsible for? What is it within our gift to be able to actually reduce in terms of emissions? And then what is it that we have to then influence to reduce further down, up or down your supply chains? So I think everyone's coming to realize that. And I would say we all need to do climate transition plans, and they need to be done both at national level in countries, but then at sector level as well. Because one of the tools we use to understand the companies we invest in or the companies we underwrite is through what that sector is doing. And without having really good understanding and really good data about how sectors are performing, it becomes very difficult. So the more clarity we can get, the quicker we can get that clarity through these climate transition plans, I think the better.
Brilliant. Thank you for that, Claudine. And again, yes, you were, I think, one of the first companies out with that. Niall, in an Irish market, I think Irish Life Investment Managers was also one of the first companies to pop your head above the parapet, but it was based on the analysis, the data, the facts, the building the capacity of the team here in Dublin. Does that resonate, Claudine, kind of approach? Does that resonate with yourself? Now, obviously, every firm is different, but also the sector, or do you understand the different sector transition plans as well?
So it does resonate, and we all like to be first. It's kind of isn't it embedded in our psyches. And ILM, Irish Life Investment Managers, was the first Irish asset manager to publish a TCFD report, and we, I think that gives a sense of how important that is to us as a company. But ILM is an asset management company. We're not an insurance company. We're part of an insurance group. And so I'm going to kind of be quite specific in how I address the point. Our fiduciary responsibility to our client is to give them the risks and the returns with the appropriate level of risk that they expect, based on policies or investment mandates or whatever it might be. And so when it comes to making a difference, publishing a climate pledge, signing up for the net zero asset managers in this initiative, really trying to make a difference, we have to make sure that we're bringing our clients with us, and that we're doing so in a way that ensures that the returns that they expect are not compromised by what we're trying to do to impact, to make a difference from a climate perspective, which kind of sounds a bit maybe lacking in consistency, but it's really important. And so when we sat down to analyze our client portfolios and to see what we could do, we couldn't just make a blanket decision to move 100% of our client portfolios to be net zero aligned. That wasn't what they mandated us to do. And so the big challenge that we had to try and overcome was, how can we really make a difference and bring our clients with us? And numbers kind of tell a story. If you go back 3 or 4 years ago, 20% of our client portfolios were Article 8 or Article 9. Now they're 50%. And as we've gone on that journey, and I've worked in this industry for more years than I really care to count, it's been quite unique in that we didn't have to sell that journey to the vast majority of our clients. We built the investment solutions that were net zero aligned, that were Article 8 in nature, so with clear environmental and social parameters. And the clients came looking for it. Yeah, you sell. I'm not making light of that. But the reality is that growth from 20 to 50% has been probably the most stark change in an investment book of business that I've seen in my entire career. And that's because at the heart of what we've done is given the clients the risks and the returns that they expected, but really clearly moved the dial on things like carbon intensity, ESG scores, governance, and other factors that are in the portfolios. And that's how we've come at it as an asset management firm. Give the clients the investment solutions and genuinely establish policies that make a difference. So by signing up to the Net Zero Asset Managers Initiative and the interim targets in 2025 and 2030, interim goals, we have clearly put a flag in the sand, if that's the correct term, or a flag on the mountain, and that's where we're traveling towards. And our clients understand that that's the way our portfolios are constructed, and they are keen to go on that journey too, so that they know that their capital, when invested, is actually aligned with making a difference.
Okay. Claudine, I'll come back to you for a moment. Sometimes, and I say this half jokingly, I feel like an amateur therapist. You know, within the financial centre, we've got over 40 financial centres. We've got stock exchange, banks, asset managers, so on and so forth. And that's one of the networks I oversee. But you have senior people come to you and saying, we're only getting ahead around climate now. We're only, to David's point, using TCFD framework. And now we're TNFD, and now we've got nature related, and it's overwhelming. And, you know, there is this war for talent as well around people who understand sustainable finance. And the point that was made later on today by one of our other panel members is that this is relatively new. And so you don't have vast amounts of people wondering about an organization, even the size of Aviva, that you could point to that is an expert per se. Now, you have experts, but as David said, maybe perhaps you don't need everybody to be that. But do you sometimes, because you are an international firm, so you're dealing with the UK, you're dealing with different markets, EU, non-EU. How do you approach that taxonomy standard? Sorry, I'm even getting myself in tizzy now thinking about it. How do you approach that, please, Claudine?
I've worked for quite a few international companies, and so kind of I can bring that experience in this place as well. And one of the first firms I worked for was Honda, and their philosophy around this, which I think we've got at Aviva as well, is that you've got to trust the people on the ground who know that market well. And so we've got a similar approach here. So we have some colleagues, sustainability expertise across the business, and they sit within the investment team here in the UK. We've got people in Canada who sit with the Canada team. We've got people in Ireland who sit with the Irish team. And then we bring all that together into our working group, which we call our Climate Action Working Group. And we meet on a regular basis. And we've got the same goals, but they might be implemented slightly differently in those places. So Canada's issues are very, very different to the UK issues. But actually, we also learn from each other because there's a lot going on there that hasn't quite accelerated in the UK, and vice versa, or in Ireland. You've got CSRD, and I'm very lucky to have that as another report that you've got to do. So actually, we're learning quite a bit from that and saying maybe there's parts of CSRD that would be relevant for us to start thinking about in terms of metrics that we should be incorporating in more widely than just Ireland. So actually, I think it brings a richness, but it's really important to have people on the ground in those places to do that.
Okay, I know Brian is fantastic here in Ireland. I've met with him several times. He's a bit of a legend in the market as well, actually. But he is a great guy. And then obviously, Niall, I saw you smiling about CSRD. No, just on that piece about CSRD, and it's come up a lot in the last few panels. How important is that for you as a firm? As you say, you know, the next stage, that you now have the CSRD and reporting against that. Does it take away the fact that you were reporting against previously voluntary 3, 4, or 1 or 2 different frameworks, and now you've got this coming out of the EU?
That's almost like an unfair question, I have to say, Stephen. Like CSRD is a huge piece of work for an organization like Irish Life, because it's not just Irish Life investment managers that CSRD affects.
Gotcha.
What I like about CSRD is that it's going to give a richness to data that didn't exist in corporate reporting previously. No matter what level of sustainability disclosure there was from an individual company, it is going to be materially greater. And for investors who want access to information to make informed decisions, I think that's a positive. It's a heavy lift to implement this. And I think it was Claudine that mentioned earlier, it just keeps coming at you. Work just keeps coming at you throughout your career. But I think from a sustainability perspective, from a climate perspective, so much keeps coming at you. You have TCFD. Last year, you had PAI, entity level reporting for the first time. Now you're into CSRD and TNFD. And what next? And it puts a burden on financial services providers, not just financial services providers, but certainly investment management companies. It provides great data, I think, and great insights, but it's going to have massive push-down impact as well into smaller companies and their ability to provide the data that larger companies require to complete their CSRD reports. I think I kind of have a concern around the smaller companies and the burden for them. But from an informational perspective, I'm kind of wandering a little bit here, but from an informational perspective, I like what CSRD is going to do in the long term. It's going to give much greater clarity to data, and that's going to make investing and understanding what companies are really doing more clear.
Well, I think, your point around smaller companies or SMEs, Europe, and I can't speak for Kenya, but, Europe, the lifeblood of the economy, right? And how are you as an SME the next 2-3 years being told by your bank that they can no longer bank you because you're not doing scope 2, scope 3? And, I saw an article in the Irish newspapers earlier on this week about SMEs are saying we've got concerns here. We don't know where to go. We don't know where to get the assistance and what type of kitchen we'd be buying and so on and so forth. And you don't want them becoming stranded either. So you are right. If you don't bring that, if I can use the expression, the SME with you, well, it's going to be tough to hit our targets. And I'm talking at a national level here now in Ireland, because this is where most of the activities actually are ongoing, right? And we're seeing across Europe, we have elections coming up. One of our earlier panel members mentioned, obviously, this could all change the election in the US the first week of November. But there's also another panel member said there's 50 different elections this year in different democracies around the world. And you're seeing the farmers in Europe the last few weeks protesting. Enough is enough is kind of what you're seeing in the placards. And so it is an interesting time. And you're not, I'm not trying to put words in your mouth now, but if we don't bring these SMEs with us, all this kind of work we're trying to do, unfortunately, will be won't be as impactful as we want it to be. David, I've seen you nod your head a few times. I'm just conscious of time now. If we look at it in terms of 2024, I know in the Irish market you're going to be supporting a lot of the sustainable finance skillnet activities. There's a program about ISSB coming up in the next few weeks that you're good enough to run. But kind of at your perspective, the international perspective, 2024. A lot of people this morning saying Dubai was a key event and sustainable implementation this year. What's your perspective, please? What we need to do this year in the sustainable finance agenda?
Yeah, I think this year we have this trend in sustainable finance of naming years. I wish we had a calendar kind of similar to various societies where you kind of go around with different animals or different, and we have the year of the commitment, the year of the transition plan, the year of net zero. And I think what we really need to recognize this year is that work isn't yet done. And in many cases, it's barely begun. And so this year really does need to be a year of delivery if we're going to pick something. There will be new frameworks. There are new pieces coming in, even just as we've, just before we got on this call, I saw that, the nature restoration law was approved in the EU, which is a big win for nature. But the point of this is we have precious little time on our goals. And I had written a piece in Forbes a couple of weeks ago about, that we've basically touched 1.5 degrees last year above pre-industrial levels. Does that mean our goals are dead? And I think the answer is a definitive no. But what it certainly means is the path that we're on is going to be the path that we increasingly find ourselves stuck on if we don't take action. And so it's always going to be worth it to mitigate. It's always going to be worth it to act. Every single study, every single analysis shows it's cheaper, it's easier, it's more straightforward to do it now than to wait till effects happen. But what we're really seeing is, I think this year, we want to see financial flows begin to shift. Paris has this article called 2.1C, which is really, even before we get into all of the discussions that people love to cover at COP, loss and damage and adaptation and finance. And this is really about making financial flows consistent with the goals of that 1.5 degree world. And I think we need to really see ourselves moving in that trajectory as well. And I think we'll see that through continuing to scale up even amid challenging economic and interest rate conditions. And I think it will be also increasing commitments like some that many large institutions are beginning to contemplate about what they do with their fossil asset financing, what they do with the long-term vision. Because when we really think about it, 2030 is now, within shouting distance, and that is one of our key milestones, and we're not going to be able to sit around and wait. Activities that are happening today are going to be the ones that go on in 2030. If it's a new mine, this is when the permitting, this is when the financing gets lined up. If it's a new project, this is when that gets scoped out. Even if it's an emergent technology that's embryonic now, if you want it to be at scale by 2030, this is the time. And so I think really trying to put ourselves in a future-oriented mindset and really make this that year of delivery. We talked about the 2020s being a decade of delivery, but if we have to zoom in for a single year, this is the one right now to really try to seize.
Thank you, David. Oscar, Africa, Nairobi, what we said to Frank and David's point there. What are the priorities for you this year, please?
Yeah, so I'm glad that CSRD is not one of our priorities for this year. But I would say I think two things. I think the idea that commitments need to be sort of made and increased and rolled out is fine. But I think we as a country, as a continent, need to do a lot more to churn out, enough bankable projects that can attract that finance. So I think we've just got to play our part in terms of making a conducive environment to ensure that those finances can flow freely and happily into the environment. I mean, Niall gave an example of how the portfolio grew from 20 to 50%. I think it's clear that there is revenue, income, and money to be made. You just need to have the projects there. So that's what we need to do is just roll up our sleeves and make sure that we have the right environment, the right projects, and then I think the finance will begin to flow in greater numbers. So that's what I'd say. If there's one ask.
Thank you, Oscar. Niall, final word to you, please, sir. In terms of the Irish market, what would you like to see this year with top of the year delivery, and maybe Irish Life Investment Manager, Irish market, but just kind of your sense, please.
What would I like to see? That's a pretty tough question. I think what I'd like to see is clarity on regulation and understanding, because we've been grappling with these terms like Article 8 and Article 9, and they mean exactly nothing to the man on the street and the woman on the street. And what we need is, if we're going to encourage people to put their savings to work to fund sustainable investing, they need to be able to access investment solutions that they can understand. And I don't think they can understand an investment management company or a life assurance company putting a fund on their shelf that says Article 9 I think the UK has done a good job with its labelling framework that they outlined at the end of 2023. And while I don't think we'll get new labelling regulation finalised this year, I think capital will flow to the right place if people understand what's happening. And I don't think that we're there yet. In Ireland, we do our best to help, but I think there's more that can be done in that regard, and I think regulation has a role to play.
Well, that's a great way to finish because it's a very practical way, right? And as you said, we've brought it down 50,000 feet, maybe to 10,000 feet now to really mobilize those big buckets of capital. And as somebody else from the Irish market mentioned today, I know Patrick has said it several times, there's a lot of capital here in Ireland. But right now, it's not being invested in transition plans. It's been invested elsewhere around the world. And it isn't a shortage of capital, but to your point is why? What's the return and why should they be doing this? So that's very interesting. Maybe the centre should look at that and maybe look what the UK did and what would that look like in an Irish context. But look, we're bang on an hour. I want to thank all our panel members, obviously Frank for joining us at the beginning, Claudine, David from London, Claudine from London, Frank from Frankfurt, Niall, you're from Dublin, and Oscar from Nairobi, and I'm also in Dublin myself. Thank you all for participating today and have a great day, and thank you for your insights.